Hey, it's Nathan with OptionsForAll.com. In this video, I'm going to go over a real-life example of how I go about evaluating a short iron condor so I can decide if I need to make adjustments to it, like I could roll it down or up, or maybe out and up or out and down, or move my legs in or out, and so on. There's a bunch of different actions you could take to defend an iron condor. And I'm going to go over some of my process because I have one that's kind of approaching like a danger area where I might need to do something. So I'm going to show you in regular Robinhood, then we'll hop over to Robinhood Legend, and I'll show you how you can evaluate your short iron condors over there. So coming over to Robinhood, and this is the iron condor that I'm going to be evaluating. So I have 3 iron condors on the SPY ETF. My short put side is 646 and my short call side is 714 strike price. So that's kind of my range. I need the SPY ETF to stay within that range so that way I can make the most amount of money. And when I open up these 3 trades, the price of SPY was about $680. And if we scroll on down a little bit, we can see that the price of SPY is now $660. So it's coming down. It's getting closer to my short put side or my lower limit. It hasn't got there yet. You know, I got 646, so we still got about $14 before it actually causes some damage. But in the meantime, I may still want to make some adjustments because my call side should be pretty profitable at this point in time. So maybe I'll be able to roll the call side down and generate a credit, and also roll my put side down a little bit, and I will have to do that at a debit, but maybe the call side credit will outweigh the put side debit. And hopefully that made some sense. If not, you'll see it in an example and it'll probably clear up. All right, so I'm going to go ahead and click into this particular options trade, and I'm going to go to view all options, and I need to change my date to the date that the option actually is expiring, which is the December 19th date. Now, unfortunately, Robinhood doesn't make it easy necessarily to roll or update your iron condors. You kind of have to do it manually. It's not difficult, and it makes some intuitive sense once you're doing it. But there's not like a simple roll this iron condor button you can click and it just rolls it for you. You kind of got to do your own adjustments to make it happen, and you kind of got to do it bit by bit. So the first thing I'm going to go ahead and do is evaluate the call side and see how much credit that I could receive by rolling that down. So let me make sure that I'm on the call side, which I am, and let's come on down here and we'll see where my call options are. So here's my long call options at 719 strike price and my short call options at the 714 price. And you can see that the price for these options is about 21 cents and 15 cents. So they are quite out of the money at this point in time, which makes them cheap to close out. So to close it out, I have my buys right here, so I need to go ahead and sell those first. So we'll go ahead and sell my 3 long call options at the 719 strike price. And then I need to go ahead and buy back my 3 short call options at the 714 strike price. So I'll switch over to buy, and we'll go ahead and add that to my order. And we can see that the total cost for this trade is 8 cents. So pretty small amount to go ahead and close that out. Now let's see what it looks like to reestablish my call side closer down to the current price of the stock. So let me switch back to sell because I like to open my short positions first, and then I open my long positions based off of where my short positions are. So let's go on down, and I want to look for a 0.2 delta. You can see that I'm at a 0.02 delta with my current strike price, so way out of the money. I have a 98% chance of profit, so that's why it's so cheap to close these out, because the likelihood of them being exercised is so small at this time. So let's move it down to a 0.2 delta. And while I'm doing that, I do want to point out that obviously I have a video on doing short iron condors that I recommend you watch before watching this video. I should have said this at the beginning. But if you don't know what a short iron condor is, I might be talking way over your head. So watch that video first. All right, so there we go. Here's our 0.2 delta right here at 685 strike price. And I'm on sell and call, and we're going to go ahead and add that to our order. And then I want to go ahead and buy my long call position, and I want to be a $5 spread. So I'll come up to 690 right here, and we'll add that to our order. And we can see that the total credit for this particular trade is 102. And by executing this trade, I basically bring my entire short iron condor call side down closer to the current price of the asset. And in doing so, I would receive a $2 credit times 100, so $102. And then I'm doing 3 iron condor trades, so $306 credit basically is what I would receive for rolling the call side of my iron condor down. So we have that amount now. $2 is what I can make. Let me go ahead and clear this out. And let's go ahead and evaluate the put side of my iron condor. So let me switch over to put now, and we'll take a look at where we are on the put side. We keep scrolling down. There we go. So there are my 3 short put options at the 646 strike price and my 3 long put options at the 641 strike price. And let me switch to sell real quick. We can see that the delta is 0.34. I like it closer to 0.2, and my chance of profit is 72.23%. So still pretty good odds. We are, like I said, $14 off from my short strike price, so we still have some wiggle room. I probably would not do this trade today, but maybe if I was going out of town or something like that and I didn't want to have this hanging over my head, I might go ahead and proceed with the trade. But anyway, let's keep moving forward. So the first thing we need to do is buy back our short options. So we're going to switch to buy, and we'll add that to our order. You can see that it's significantly more expensive than our call options because we're getting closer and closer to that bottom range, and therefore the options are more expensive. And we need to go ahead and sell my long positions as well. So we'll go ahead and sell that. And we can see that the total cost right there is $1.28 to close that out. But I still need to open up a new position where I'll earn a credit. So let's come on down and we'll look at the 0.2 delta. So here we have it at 626, the 0.2 delta. Let's go ahead and add that to our order. We want to make sure that we are selling or shorting the put option. So I'm going to go ahead and add that to our order. And then I want to buy the long put option, $5 spread on the strike price. So that would be 620. Come on down here and add that to my order. And so there we go. So there's the total cost to roll my put leg of my Iron Condor down to a less risky area. You can see that it's going to cost 68 cents to do that. And now if we do the simple math, we're going to earn $1.02. I think it was $1.02 on the call side by bringing that down. But then we have to spend 68 cents to roll the put side down. But the total credit of the whole trade would be the 102 minus 0.68 would be 34 cents. So overall, it is a profitable trade to go ahead and move our Iron Condor down to this new position. So that's how you can go ahead and evaluate your Iron Condor positions. Now there's other ways you could go. You could also roll out if you wanted to. So to a different expiration date. So that's another strategy you could go ahead and do to manage your Iron Condors. Now let me switch over to Robinhood Legend and we'll go over it real quick over there because I've explained the concept and hopefully you understand it. And I just kind of want to show you what to click over here on Robinhood Legend because it's a little simpler to do it here. So we'll go to SPY and let me go to my particular Iron Condor trade that we were just looking at on December 19th. And just like before, the first thing I would do is evaluate my leg that is most profitable. In this case, it's the call side of my Iron Condor that I would evaluate first and see how much credit I could receive by rolling it closer to the current price of the asset. So that's what we would do first. And here we are on my particular options. So right now I have 3 long calls, so I need to sell those. And then I need to go ahead and buy back my 3 short calls right here. So I'd go ahead and click on the ask side to buy them back. And we can see, and let me increase my quantity to 3. So we're looking at my total order. We can see that it costs about $18.25 to close that out. But of course, I want to be rolling it back. But of course, I'm going to roll it down. But of course, I'm going to open up the other leg and essentially roll it down. So let's come on down. We're going to look for our 0.2 delta. So come on down. Here we go. The 0.2 delta. I want to open up the short right here first at 685 strike price. So I'll click the red option to sell. And then I'm going to go $5 up in the strike price to 203 and buy that particular call option. So I'm on the ask side or the green numbers. And we can see my estimated credit is $1.08, or my total estimated credit is $323 for doing that particular move. And let me clear that out real quick. And then we would do the put side. So we have $1.08 credit that we're going to receive. So we want to make sure that whatever we do on the put side can be paid for with that particular credit. So I need to go ahead and close out the current put credit spread that I have. So I'm going to go ahead and buy back my 3 shorts at the 646 strike. So we're on the ask side, we're buying them back. And then we want to go ahead and sell my 3 long put options at the 641 strike price. So we're going to go ahead and sell those. So that'll cost me $1.21 or $363. But we're going to open up another put credit spread just a bit further out of the money. So let's come on down and look for a 0.2 delta. And we have one right here at 626. And I want to go ahead and sell that particular option first. So we'll sell it by clicking on the red button or the bid amount. And then we're going to go $5 down in strike price, keeping that $5 spread. And we're going to go ahead and buy our long put option, so on the ask side of the green number, and buy that back. And you can see that our debit now is 54 cents and our estimated total cost is $162.51. So doing this entire trade will net us about 160 bucks. And also realign the risk to the current market conditions. Like I said, I bought this option when SPY was about $680. It's since dropped to $660. So we're kind of realigning to where things currently are in the market and picking up a credit along the way. And so that's how you can analyze and manage your short iron condors. I hope you found this video helpful. If you did, I appreciate your likes, comments, subscribes, and I hope you have a great rest of the day.